Good day, traders. The 4-step method to high performance trading and the free audio program, the 7-step daily routine for high performance traders, are both free downloads to help you develop the skill set, the mindset, the discipline to master the markets. The link is down below in the box, the description box. They're both free downloads. Let's get started. Good day, traders. Stacey Burke from Stacey Burke Trading, and today we're just talking about classical charting and gold first green day, coming back to some basic concepts. And traders are nailing some of these trades. Congratulations to some of the traders that bought the first green day trade and held it. Again, I mentioned in the earlier video that you have to resonate with the type of trading that you're comfortable with, whether it's buying and holding onto positions, selling and holding onto positions, whether you like to be in and hitting high probability setups with size and getting out. That's, an entirely self-discovery process in terms of depending on what your goals are. Some traders are just looking to, add to, manage their portfolio better and add size or grow their account slowly. Other traders are looking to produce income. Other traders are looking to produce 6 to 7 figure incomes. So, it doesn't matter how you trade. As I always say, there's opportunities for bulls and bears. But today we're talking about first green day trading opportunities. We'll talk about first red day and first green day. Also, 3-day setups, 3-session setups, Monday's opening range, initial balance. I keep repeating the same things. Traders are focusing on if something closes up for the day, it's the first green day, or if it closes down for the day, it's a first red day. It's a setup. And so you want to be paying attention to the types of days and how they are and how they're structured. They are very specific, and they are very specific in terms of how they will play out if they are the right trading setup. The same goes for day 3 longs, day 3 shorts. It's not just because something goes up for 3 days that we're going to sell it. You need to have a setup, and also stepping back and going back, understanding what these best trade setups look like and then how they should behave, so that we're not just trying to randomly trade anything that gives us 3 days long and take trades everywhere. Remember, my approach, my playbook is about specific trades, and when they set up properly, identifying the best one. There might be 2 or 3. Which one is the best one? And is this one that I want to add size into because it's ready to make a geometrical range expansion? Those are the 5-star ones. Range expansions. Session scalps can be grown and sized over time. So again, it's relative to the size of your account. You could make 5 figures on a small session scalp, a few session scalps, because your account is larger and they're 90-10 trade setups. But on a 5-star opportunity, those are where traders are making 5 and possibly 6 figures in a day. So these are really important to understand. So there are bigger geometrical structures, and then sometimes the smaller time frames that allow you to get into those 5-star opportunities with a better entry, because you're timing the larger time frame setup on these geometrical structures that have the potential for a range expansion. So I want to just clarify it. I use 15-minute hourly charts, but when you come back to understanding where the highs and the lows are, it doesn't matter what time frame you're on. The highs and the lows are the highs and the lows. So if it helps you see the bigger picture on the longer time frame, that's fine. But essentially, when I come to the screen each day and I'm trading in the New York session, that's where I have a thesis already. What was yesterday? So I laugh about people who always say hindsight, because hindsight pays. What happened yesterday? Who's in the market? What type of day was it? Was it a trend day? Was it an inside day? Was it a reversal day? Was it a day 0 type of setup? Some traders asked what made the Canadian dollar a reset day on Friday. The fact that it went down first, trapped volume, and then proceeded to go higher. And then it closed as a first green day. But at the beginning of the week, the market went down and broke the low of Friday. That now confirms that Friday is our day 1. Friday was a day 3. Day 1 was on Wednesday. Thursday was an inside day. They broke down and reversed and closed as a first green day, which again, heading into the new week, we start our opening range. So some traders are looking to go long. Pay attention to the closing price. If you were first green day, look what happened if you were long on the closing price of the first green day, or trying to buy low into the failed breakout. So this becomes our day one. So this becomes a reset day. But also, if you remember what a day zero setup is, the parabolic trend trade day zero type setup: peak formation high, peak formation low, consolidation. It can happen over 3 days. It can happen over 1 day. And we'll look at gold today because it can happen over 3 sessions. Peak formation low, peak formation high. This is a low-hanging fruit parabolic short trade in the US session on Monday, coming out of a day zero reset setup. So anyways, today the purpose of the video is I want traders to understand the importance of the high and the low. So even just coming back to our parabolic setup, I keep saying prices in a box. When I come to the screen in the US session, think about, in the majority of cases, we have minimum of 3 sessions to set this up. Inside day. The next day, we come back to the screen for our parabolic setup. After our opening range breakout that is held, we're in a large rectangle. So again, coming into the 3 sessions into the new day, our inside day, this is just a classical breakout day. I'll zoom in on this. This is a breakout candle. So for breakout traders, this is one of the few times that we get a breakout that is in line with the parabolic trend trade underneath the high of the week. But we, just zooming back out, coming back to our high-low levels, I'm looking at the big picture for my bigger thesis, whether it's for a short trade on the day, whether it's for a breakout of a larger rectangle for a range expansion, which may be targeting the high and low of the week. These are all things that need to be taken into consideration. But when I come to the screen in the US session, I have a high and a low of the day. They've already broken out of the high of the day. So if you're trading in the Europe-London window and they've come down, this is a parabolic 3-session setup. US session high, an Asian low, consolidation. These are parabolic. They're parabolics everywhere. Parabolics everywhere. These are what Peter Brandt calls trend patterns within patterns. So, but the big picture, the high-low, what protects me, this is a failed breakout that comes up and puts a lower high in place heading into our US session. This is on a 15-minute chart. High bull, potential major resistance, lower low, pump and dump trade. Now, again, I resonate better with getting in heavy and getting out. I don't particularly want to be holding on to positions with size, but I'm prepared to put a position in the market in a strong probability of a market that may be doing a range expansion and letting that run because it doesn't bother me. That's the position that they call the sleep size. If you can sleep and it doesn't bother you, then that's the position that you should trade with. So again, there's our rectangle on the first red day. The next day we have a low and a high heading into the new day, which is why in the playbook I talk about consolidations. Draw your consolidations. The Asian session puts in a low of the day. This is what Peter Brandt calls patterns within patterns. So they make a lower low, not really a peak formation low until the Asian session, but that's a pattern within a pattern. It breaks out of that rectangle, pulls back, continues lower, and we talked about this in the last video. Consolidations at the low or the high of the day that goes sideways potentially are coiling for a large move. But our bigger thesis is peak formation high that failed at the high of the week, day one, first red day. Europe, London starts the first leg down. The consolidation into the US window now sets us up for our measured move range expansion on our first red day on day two. We come into our new day on Wednesday and we have our high and low of the day. There's our rectangle. We had Fed on the day. And again, just reinforcing that This market doesn't have to be traded every day. The same thesis applies on any market, but I want to identify a best trade setup in the session that I'm trading. Obviously, we had another breakout later in the session. The market has broken outside of its rectangle. Price is always in a box. And then, like Peter Brandt says, we have a pattern within a pattern. Another rectangle at the top of the breakout, a wedge, rectangle, whatever you want to call it, for an explosive move into the Fed. Now, day zero, we have a market that breaks out, puts in a low, a second low, a higher high into the new day, and then a third low, which becomes our low of the day now from our Asian session, which was a first green day buy in the Asian session. This is a first green day after the Fed, a day that puts volume. This is an example of volume inside of the range, a rectangle down low, but the market breaks out and breaks the high, which confirms this is now our new day one. That higher high forms our new rectangle. But notice we have one push down, two pushes down, higher high, three pushes down, dump and pump into the new day. And then we have, so that's our peak formation low. And then we have one push, two pushes, and a third push inside of that before just heading into the news, a vertical move down. So peak formation low, peak formation high, consolidation inside for the breakout and the continuation of the measured move on the day two trend day after first green day for a measured move of that geometrical structure. This is why I constantly go back to classical charting. There are these books have been 100 years old. This is not new. This is not somebody's new concepts in the last few years that has new names and all these terms. Classical charting has been there for 100 years. So paying attention inside of these rectangles, we start to see these smaller patterns within patterns as we head into our new session. Trapping traders up high or down low. So we have volume trapped up high. They broke out first. They triggered breakouts first. Okay, there's our high and low box. Now there's two theses here. There's a news catalyst potential trade. And then there's a larger picture trade for traders who are looking to trade day two long with the existing breakout first green day opportunity. Buy low of the day, buy low of the session, if indeed that opportunity presents. This is on any market, but gold in particular, as you can tell, likes to go into consolidations. Consolidations, whether they are day one, day two, day three, inside bar false break. Huge opportunities everywhere, whether they're for session trades, whether they're for news catalyst momentum opportunities. So coming back to the first green day opportunity. First green day, the thesis is the market has now locked in a low of the week and is potentially now heading back to the high of the week. It's a buy low of the day, of the session opportunity, if indeed it presents, which it did present in the Asian session today. So we have a market that breaks out. This is the 5 minute. We'll just stick with the 5 minute. It goes higher and continues to go higher through the high of the day. This does two things. This triggers breakout traders into the market on other time frames. And we talked about this in the last few videos. Other time frame traders are critical because if we do get a move in one direction or the other, there may be other time frame traders driving that move. So we have longs in the market. Let's just put a green bar if somebody was trading the 5 minute chart and they bought the engulfment off the low of the day in line with the existing long trend. Thesis being they've locked in the low of the day. The momentum is carrying through on first green day after the Fed. They come up and they go higher. They hit it a third time. One push, two push, three push. But then in London session, they take out the low of the London Open. There's our break in structure on the inside. Lower low, lower highs. Lower lows, lower highs. For simplicity's sake, let's draw a horizontal line across 50, major round numbers, And we can see that there's a box between double zeros possibly and 50, major round numbers between the peak formation high and the consolidation rectangle heading into our US session open, consolidating sideways at the previous day's high. Now, right before the session opens, they pump it up. We had major red news at 8:30 a.m. New York time, unemployment numbers. They engulf it just before the news candle. The news candle then, this is a 5-minute chart. We won't even bother looking at the 1 minute. We'll just keep it simple and big picture. The news candle then breaks down 5 minutes into it. Now, the close of this candle, if you pay, I always talk about one bar. Let's go and look at the highest closing bull candle off of 50. So we have our lows there at 50, but this is not the highest closing, but the lowest closing bull candle close right here. Do you notice now that the engulfment of at 5 minutes after the news, so obviously there was opportunities earlier. We have 3 pushes into the news. So they get traders going long into the news, into the peak formation high. Then the news candle engulfs and breaks down. And remember, we're in the money down here. I'm in the money from Asia. Let's say we're in the money and we're going to hold on to this, and we hope that the news is going to go bang and continue for a measured move. Except that it breaks down in the first 5 minutes, and that candle closes below all of this volume. Okay? All of these traders are trapped. If they're holding on and they got to stop at the low of the day, they might be on 15-minute charts, hourly charts, 4-hour, maybe they're just buying on the 5-minute and they're hoping that it doesn't go down. That's called the hope trade. But this market goes vertical in 15 minutes. Now, this is the type of short trades that I like to take on the smaller time frame. Okay, so this is a 1-minute chart, and I like these types of setups because they reproduce over and over again. They're high probability, and there's a reason why. It's because they go back to get the money. Now, I like this because they're going to go fast and not come back until they get the money, and then we get our little doji engulfment, and then we get traders who are waiting for this move because they want to get back in long, in line with our original first green day, low of the session opportunity to go long in day 2 with a trend trade if that opportunity presents. So now when the session starts, if we have our Asia trader stopped out at break even or with a loss, we have our high of the day, we can now lower our low of the day to our US session. And now we potentially have a new rectangle for a long trade for a measured move. So if you're long, so again, some traders want to hold on to this maybe for day 3 or because it's going to keep going, or they're looking for a measured move as a possible target. Again, I talk about Peter Brandt, weekly, monthly charts. He targets bigger time frames, but the thesis is still the same on the smaller time frames. Now, I like certain trade setups and I like to be done and dusted. If I leave anything in the market, it's going to be smaller, so that I call it the sleep factor trade. I like to sleep. I have my bulk of my positions locked in already on size on a certain type of trade for shorting. And if I'm going to go long, I'm going to get in, maybe get out on the range expansion, or get out if it was a Friday at the close of the week, whatever that may be. Whatever your trading plan tells you that you're comfortable with trading. The point of today is that I'm talking about these geometrical rectangles show up over and over and over again in every market. But that also gives traders an understanding. We have a low of the day, of the London day, a higher low, and then the market flips inside and prepares itself for going back after the traders who are in the money. So there are traders who were scratching their heads. And as I said, don't take those trades. If those trades don't make sense and you want to wait until you get back into your trend trade, or you're waiting for a different opportunity if you're looking for the shorting opportunity, you want to be aware that now you're in a trend trade, day 2 after first green day. This could be going for a measured move. So hopefully that makes sense, traders. Focus on the big picture, not the minutia. The minutia is for trading the big picture based on the best trade setup that presents on whatever instrument that you're tracking. As I mentioned, I like to follow gold because it will often set up well for a potential news momentum trade opportunity. Today, this was a great example of that. And the trend trade that followed is a great example of how, if you are short, to take the money, and if you're waiting to get in long, how today was a fantastic opportunity to potentially add into positions on smaller time frames or even on the 5-minute, and also to know when to take some money off if we could be nearing the end of a move. Keep it simple. Focus on the geometrical structures with any of the trade setups. This is the geometry is what will give you the large moves. Day 3 breakouts. If you're on the front side, make sure that if it's in a session, we may have a session trade. We might get a first red day or a first green day if it's a day 3 shorts before we get the larger move. So understand that. Study what the best setups look like, and then know what you're looking for and whether or not the trade that you're going to take today is set up for a session scalp. And if indeed it is the best one, filter through a few pairs. Take a look. Look for the one that maybe doesn't have any major red news on the schedule. We had Swiss National Bank today. We had BOE as well. So the euro may have been a better candidate for a day 3 breakout reversal. Keep it simple, traders. Have a great day. Thank you for the great questions. Keep it simple. Keep getting better, because these opportunities are going to repeat over and over again. And may the markets go with you.